Okay, good afternoon, everyone. You're welcome to today's edition of the Currency Power Strategy. Of course, you know that this class will lead us into live trading session. So you're welcome to Currency Power Strategy stroke live trading session. Um, Name is Samuel. I understand that many of us I got a lot of emails from last week's from our last week meeting, and I'm glad that I got good feedback from many of us. Um, and I admit that there are some messages I've actually not replied, so very sorry about that. Um, Yes. So what are we doing today? Today, we started a series on currencies where we looked at some candlestick patterns. We looked at the engulfing pattern and the hammer, and we said I advised us to actually check out for those patterns, especially on the higher time frame, on the 1 hour, on the 4 hours, on the daily, and use it to trade. And I said we were going to get feedbacks today. I hope that I have people who were able to look out for those trading patterns on currencies and were able to utilize it. And we're going to come to that in a minute. But that's what we looked at. Another thing we looked at the index market, especially for the indices mastery class last week Thursday, where we talked about the fact that indices was on a downtrend, and I advised of us, many of us who were there, advised us to always look out for sell positions from the resistance point. I also hope that we're able to follow that. I hope we're able to use that to advantage, because if you did, you'd be on a sell on indices, and you'd have made a lot of money from the index market. But today we're talking about currencies, and why it's going to be interesting is because in a few minutes from now, 27 minutes from now to be precise, we'll be getting one of the high impact data, the one we call the CPI. And in a moment, I'm going to be explaining CPI and what it means. We did something like that last week. I think one of the data also came out that we're able to trade with. So we should be looking at taking that opportunity also. There are some persons who are not here yet who will come online in the next 30 minutes and they will say, oh, please, I was not here during Euro USD. I always advise and encourage us to be here on time, so that we can get the ball rolling. I may not revisit any instrument I visit now because we have a lot to cover today. Okay, so yes, I have shared on my screen with us the high impact data that we have for today. And I've tried to zoom in so that we can see what I am talking about here. Good. So if you check on your screen right now, you have three particular data that are marked with a red folder. Marked with a red folder. And we always say that when you see a red folder like this, it informs you that that is a high impact data. So we have three high impact data that are coming out. What do they mean? How can we use them to advantage? As you can see, we'll be coming out by 1:30 p.m. So how can we use this data to advantage in the next 20 something minutes? I want you to understand that fundamental is one of the quickest way you can make profit, without a lot of stress, without really racking your head and racking your brain. But last week currency class was not recorded. Okay, was not recorded, but this one this one is being streamed on YouTube. We're yet to upload that last week. Oh, we were not even able to record it. So but this week, currently, this program is being streamed on YouTube. I always encourage you guys to join our YouTube page, so that you can check out our content. We stream everything nowadays, especially our morning class, our afternoon session, our special sessions. So you can check them out on YouTube. Okay. Now I was saying that fundamental can be a very smooth way to make profits. And you don't need a lot of headache, but where you may really have issues is understanding what that fundamental is about and what it means, depending on what data comes out. So what we're going to do within the next few minutes is to try and understand what CPI is all about and what it means for the dollar if it comes out higher than expected, what it means for the dollar if it comes out lower than expected. That's what we want to do now. CPI stands for Consumer Price Index. Okay, CPI stands for Consumer Price Index. And you check here that we have three types here. We have core CPI M/M, we have CPI M/M, and we have CPI Y/Y. Okay, what does that mean? Before we go into that, what does CPI mean? First of all, CPI is Consumer Price Index, right? CPI stands for Consumer Price Index. And when you talk about Consumer Price Index, it is normally anywhere you hear index, just like the indices market, anywhere you hear index, it means that we are combining different things and looking at them as a whole. Okay, so when we say Consumer Price Index, it means that we are combining different consumer goods and we are checking the price of different consumer goods. So we're going to be checking the price of different consumer goods and we are going to apply a ratio to them or apply an average to them. Okay, so the way it is calculated is that to calculate the CPI, the Consumer Price Index, they put together some popular consumer goods and then they compare the prices. I remember that when we were talking about this last week, we looked at some examples of consumer goods if we'll be considering Nigeria. We talked of the fact that there's going to be something like maybe beans, there'll be something like rice, and of course there will be groceries. There will be groceries. For those who do not know what grocery is, I don't know how you have been I don't know how you roll. I expect everybody here to know what I mean when I say grocery. Okay. And there may be some tush people here who do not know grocery and they think I'm talking about going to the mall and getting toilet paper and things for the home and bread and whatever. That's not what I'm talking about too. When I talk about grocery, that's not what I'm talking about. Thank you, Abarachi. I'm talking about Gary. So I'm talking about Gary. That's groceries. So yes, God bless you, Abarachi. You will not lack. You understand? So yes, so in Nigeria, you're going to bring Gary, beans, rice, like that. Okay. See canned food. Somebody say canned food. God, Japheth, why? In Nigeria, when we say grocery, we mean Gary. But what I'm trying to say actually is that when you bring together those goods, you bring them together, you now compare the price. So if you check here at this place, you have M/M, you have Y/Y. Okay, so you can check. If you bring the 5 of those goods together, you can check what their price was last month and what it is now for the M/M. So the M/M talks about monthly. Okay, the monthly index. Why the Y/Y? So look at what their prices was last year and what it is now. Do you understand what the prices were last year and what it is now? So we will now ask ourselves an important question. Has the price increased or has it reduced? You understand? Has the price increased or has it reduced? So if the price of Gary has increased, they record it. They record the one for yam, they record the one for rice, they record the one for beans. And when they do that, they will now come up with an average or a rate and convert it to percent. That is why what you have here is in percentage. Okay, so what does that mean? By the time we calculate CPI, Consumer Price Index, it helps us to understand what the rate or the level of inflation is in an economy. So we can tell what the level of inflation is in an economy. That's what it does for us. Okay, that's what it does for us. Now, if inflation, and what is inflation? Inflation is the abnormal rise in price of goods and services. Okay, that's what inflation is. Nobody really understands what inflation is like Nigerians. You know that there are things that you have gone within a week to buy and the price has changed. You understand? The things you have gone to. That's why they are telling people now to spend and enjoy their life. Eat that shawarma now. Eat that shawarma now that is 2,000 naira or 2,500. Eat it now, because you could go next week and that shawarma is now 4,000. So go and buy it now and eat it. That's inflation. That's inflation. Now, what does it mean? It means that if there is increased inflation, it means that things in the dollar in the US are getting more expensive. That's what it means. So it means things in the US are getting more expensive. But how will that affect the dollar when that data comes out? And that's very important. How do that affect the dollar? Normally, when we talk about inflation, inflation generally should not be good for the dollar. If there's a rise in inflation, it should not be good for the dollar. But this is what I'm going to tell you. What we expect, or what I expect from this data, is that if this data comes out and it is higher than what we expect, it will give strength to the dollar. Why? Now, when there is increased inflation, what investors immediately think is that, oh, this increased inflation is going to make the US government will force their hand to increase interest rates. And when there is an increase in interest rates, it means that you can make more returns when you invest in the dollar. If the interest rate of the US is increased, if the interest rate of the US is increased, what that means is that investors will want to invest more in the dollar, buy more of the dollar, because it means that they're going to get a greater return when they invest in the dollar. When they hold the dollar for a particular period of time, they're going to get a greater return. That is what CPI is all about. So that's what interest rate is all about. So if the CPI comes out and it is higher than expected, that means that there was a higher level of inflation for last month. Instead, what that would do is that it will make investors think that, oh, if there was a higher inflation for the last month, that means that, because one of the ways the government tackle inflation is with interest rates. Okay, so if there was a higher rate of inflation, it means that there's a high chance that the Fed will increase interest rates. So an increase in CPI data usually gives us an increase in interest rates. And that means an increase in CPI data usually gives us strength for the dollar. So what that means also is that, I'm connecting a lot of meanings to this. But what that means is that, for instance, core CPI, we're expecting that it remains the same. If core CPI comes out, because what we have here is 0.2%, what we're expecting, the same as last time it came out. But if core CPI comes out and it is higher than 0.2%, say it is 0.3%. If it is higher than 0.2%, if CPI comes out and it is higher than 0.6%, if CPI comes out, it is higher than 3.6%, if this data come out higher than expected, the dollar is going to be very strong. And what that means is that when this 130 data comes out and it is higher than expected, something like Euro USD will sell, GBP USD will sell, gold will sell, US 100 will sell, US 30 will sell, US 2000 will sell, USD CAD will buy, USD CHF will buy, AUD USD will sell, USD JPY will buy. Because if the interest rate, or if the CPI comes out higher than expected, it will give strength to the dollar. So that is a very important information that you guys have. I will not advise that, I will not advise that when CPI comes out, or, for especially CPI, data like that is very strong. I will not advise that, maybe it's good if you can even place pending orders, around that point. But this is what I'm saying, and that is how we traded the last time. Understand what the data is all about. Okay, when you understand what the data is about, you can tell what will happen when the data comes out. So what I'm saying is this: if the data comes out, especially CPI monthly, the middle one, especially that one and the upper one, the core CPI and the CPI, the ones with monthly, if they come out and they are higher than expected, so if data comes out higher than 0.2% and higher than 0.6%, there is a very high chance, of course, nothing is 100% certain, but there's a very high chance that this will give strength to the dollar. So if this news comes out, immediately it's 130, I can confirm that it is higher. I can take a buy for the dollar. And what does that mean? I repeat again. If this makes the dollar strong, that means that something like Euro USD will sell. Something like GBP USD will sell. Something like AUD USD will sell. Something like NZD USD will sell. Something like US 100 will sell. Something like US 30 will sell. Something like gold will sell. Something like US 2000 will sell. Okay? While something like USD CAD will buy because USD is the base. Something like USD CHF will buy. USD JPY will buy because the CPI data has come out higher than expected. But if the CPI data comes out lower than expected, if it comes out lower than expected, then there's a high chance that the dollar will fall. There's a high chance that the dollar will fall. And what does that mean? If the dollar falls, that means that Euro USD will buy, GBP USD will buy, US 100 will buy, US 30 will buy, US 2000 will buy. You understand? Because the dollar is going to be weak. Now, if the data comes out the same, normally when the data comes out exactly the same, it is also considered a good thing. In this case, considered a good thing. But my advice is, if this data comes out the same, then I would rather wait for the afternoon session. If the data comes out the same, especially CPI, the first and the second CPI data, they come out the same, then it's very possible that, we just hold on till the 2:30 session to see how the market reacts to that news. Because remember, we follow the market. The market doesn't follow us. We follow the market. We try to do what the market is doing, because what the market is doing is showing the general movement of price. And it's better you follow the general movement of price so that you are not swimming against the current. Okay? How do you see the data before 1:30? You can't see the data before 1:30. The data is going to be released by 1:30. So you need to be on the way I'm on Forex Factory now. That's how you need to be on Forex Factory. You can just hold on. We are going to see the data when it comes out here. You understand? Here. Then the data comes out mixed. I've said, especially in the case of core CPI and the first and the second, it is very rare for them to come out mixed, because they both look at the monthly, that's for last month. Very rare for them to come out mixed. But if they come out mixed, now I'm going to say this, most times when a data is coming out, say on US, for instance, on the dollar, you have about 3 data coming out around the same time. Whenever they are mixed like this, I rather just stay away. So most times I found out that when they are mixed, they give weakness to the dollar. Actually, found out that if the data is mixed, it gives weakness to the dollar. But if the data are the same, especially to the upside, the dollar is going to gain a lot of strength. Okay, so I have explained once again that when CPI comes out, CPI is coming out in the next 10 minutes. When it comes out, we are going to consider the first and the second CPI, core CPI M/M and CPI M/M. And if they come out higher than expected, if the first one comes out above 0.2, the second one comes out above 0.6, we should be looking at buying the dollar. Okay, now another thing I'm going to say about CPI is also that most times, especially in the past couple of months, CPI has always returned. Say, for instance, if it trades bullish, it will sell and return all that bullish. If it trades bearish, it will buy and return all that bearish. It has done that for a couple of months now, and it has become like a character. It has become like a character. So what I would advise you to do for trading, especially if you've taken the first move, you have enjoyed for the first move, it's possible to take the retracement during the next hour, especially when we go into the US session. We can, of course, we're going to confirm from the chart, but it's very possible that we'll be looking out for that fundamental move retracing. Whatever the move is that it does, there's a high chance that it's likely going to retrace. Now, remember that for fundamentals, it's not so much about a matter of take profits, because the move is going to be very fast. It's likely going to be very radical. You don't know how long it's going to move. Okay, so the best thing you're doing for fundamental is and that's how the game is, because the market can be very fast. You want to use the best lot size that you can, okay, of course, depending on your balance. Okay, there are going to be some risk takers who use lot size that is, highly proportional. It's not directly proportional to their balance. So, well, but my advice is use the best lot size you can use depending on what you have. And that's why I expect that if you wanted to trade CPI today, you most likely should have increased your trading balance. That is if you want to use a very good lot size. It will be greed. Of course, you can be lucky, but it will be greed. It will be greedy of you if you're using a high lot size that is not proportional to your balance. You understand? Good. So we are going to even look at our chart and say, call you for the outcome of CPI. CPI is going on in the next 9 minutes. So you are here already. You understand? You are here. I said if they are having conflicting data, we just want to watch the chart and see what it does, because they're having conflicting data. It will be difficult to actually use that data to trade. So we will just have to watch the chart, or we'll even wait for the 2:30 session. With 1 million lot size, if you're trading currencies, you can do 0.3, 0.2. 1 million lot size. If you're trading the indices, index packet for this fundamental, you can do at least 0.7 to 0.1 on indices if you have 1 million naira. Okay, but if it's currencies, you can do 0.2, 0.3. Of course, it also depends on your risk appetite. There's some people who do not have that, be like, hey, no, I'll stay with my 0.01. No, even you too. You understand? So I want us to look at the chart also. I want us to look at the chart. For 500,000 on currencies, you can do 0.1. You can do 0.1, 500,000. But for indices, you could just stick with the 0.05, 0.06. So thereabout. Okay. Oh, okay. We can see my chart already. Let's check out the US index. Okay, good. So in the past, this is the dollar index. The past 1 hour, the dollar index has, been giving a steady rise. It has been making a steady rise in the market. You also notice that it's very possible that this gives, and many of the, analysts that I look at actually expecting this to give strength to the dollar. They are. And if you look at how yesterday's candle ended on this support, it's very possible that the dollar continues strength today when CPI comes out in the next 7 minutes. So it's very possible that this news is going to give strength to the dollar. We have to watch out for that. You understand? Because if you check the dollar, most times, even fundamentals, at the end of the day, they actually follow technicals. You understand? So if we check the dollar index, you'll notice that, there is a slight bullish progression. You understand? There is a bullish progression on the dollar index. Okay, so it's at this point here, it's very possible it breaks this resistance. Even on 5 minutes or on 15 minutes, you can see that bullish progression that it has made, making higher lows and higher highs consistently since the beginning of since yesterday, even into today. You understand? So that could actually be a pointer that the data is going to what's going on. I have explained for 500k. Now you should be able to. Why are we doing like this? If you want for 200, this one want lot size for 300. I'm not giving you an instruction on what lot size is you have to use. I'm giving you an advice. You understand? So I have explained that for 500,000 naira now, such a person can do 0.1. You can do 0.1. It does not mean you cannot do more than that. I'm just advising. You understand? You can even do less than that. So it's your decision. Okay, it all depends, because trading is psychological. You need to put a lot size that number one, you can either make good profit or you can be comfortable with, not the one that when you finish you start regretting that why didn't I use a higher lot size. The one you be comfortable with, that okay, this 4,000 what I make is fine, considering my balance is fine. You understand? So we have 5 minutes more. I was saying something about the dollar index and how that it's been giving us this bullish this thing, and fundamental is not really something you can adequately forecast. Like technicals, you need to wait for the data to come out. You understand? If you ask me, I expect it to give strength to the dollar. That's what I expect, if you ask me. You understand? But of course, we need to wait, and we don't have to wait too long. In the next couple of minutes, that data is going to come out. So we see what it's all about. Okay. Remember, I have said, let me go back to our okay. Yes, we are back here. Oh, you can even see that even on Forex Factory, you already have a timer, a countdown. So we have said that if this data, by the time this data comes out, if it is higher than expected, it should give strength to the dollar. It should give strength to the dollar. So what we should expect is a bullish move for USD if this data comes out higher than expected. So we're going to expect Euro USD to fall. We're going to expect GBP USD to fall. We're going to expect, just like that. You understand? And then, of course, if you're into such a move, like I said, you don't want to stay too long, or it all depends on you. With fundamental moves, you don't really want to say take profit at this resistance or support because the move can really be crazy and it can be very short. So that's why I say you want to use the best lot size available to take advantage of whatever short move. The higher the lot size you're using, the shorter you want to stay in the market. I don't know if you get me. The higher the lot size you're using, the shorter you want to stay in the market. You will know when it is higher than expected because when it is high, okay, when this place here where you see the timer, the data will be released. So we are going to be comparing this data with what is here. So if it comes out higher than 0.2, that's higher than expected. If it comes out higher than 0.6, that's higher than expected. You understand? So that's it. Okay. Stop loss. Of course, it all depends on you. For instance, I personally, I do not trade with a stop loss because I'm there. I'm there to close the trade. I only apply stop loss when I'm not there. You understand? So it's all up to you. All of us have different risk. So of course you can apply a stop loss if you want to. Person asking for how long. I've said that what you can control is profit. You cannot control how long. Do you understand? That's why I said it's better use the best loss as you can and spend the shortest time possible. Some people can stay in the market with 0.05 and wait till they make 40,000. Some people can do 0.1 and they don't have to stay that long to make 40,000. That's what you want to consider. You want to consider that risk. Okay, that is the risk you want to consider. Okay, so we have it here. With the way I'm even seeing less and less messages, I strongly believe that everybody's on their chat now. They're just listening to my voice, but they're looking at the candlestick and that's very cool. You understand? That's very cool. Once again, I'm going to say we have 200 persons here. If this data comes out is higher than expected, we are going to expect the dollar to rise. If it's lower, we're going to expect the dollar to fall. If it is mixed, we'll look at the chart, but I usually do not advise that you trade once the data is mixed. Because it could be haphazard. We'll rather wait till the 2:30 session to see what it does. Okay, that's what my advice will be. Yes, you can trade on MT. Of course, you can trade on MT5. You have an MT5 account. Wow, of course you can. By all means, trade on MT5. Okay. This calendar I'm using. This is Forex Factory. This is forexfactory.com. There's also an economic calendar on investing.com. There is but this one I'm using, I think this is the most popular. So forexfactory.com is the most popular. So you can use forexfactory.com. You're trading dollar pairs. Okay, 3, 2, 1, pending, 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 pending. Okay. Okay, so it came out higher. The dollar is likely going to gain strength. It's coming out higher, guys. Dollar is going to gain strength. Okay, so we are buying the dollar. This one came out exactly at the same. Let's check our chart. Let's check our chart. The dollar is gaining strength, guys. Dollar is gaining strength. So you're buying the dollar. You're selling GBP USD. You're selling GBP USD. You're selling Euro USD. That's what we are doing. Okay. Selling GBP USD, selling this. Don't stay too long. We're scalping. You're scalping, don't forget. Okay, where's gold? Where's gold? Oh, look at gold, bearish. The data came out good for the dollar. So you're scalping a sell on gold, you're scalping a sell on Euro USD, a sell on GBP USD, a buy on USD card, buy on USD CHF. Yes, 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 yes. So I think I guess this favored the dollar. Okay, this favored the dollar. Please, I want to hear that I'm in profit. I made money. I made money. That's what I want to hear. See, US 100 also is selling. US 100 is selling because it's strong for the dollar. GBP USD is selling. Gold is selling. Remember, don't stay too long. What you need to use is a very good lot size. If you did not listen to me and instead you went to use a small lot size and now you are staying, you are waiting. That's on you. Use a good lot size, breeze in, breeze out. Okay? Breeze in, breeze out. That is fundamental for you. How many pips is this? If you were not fast enough to take any move in the market, you just hold on. Remember, I said that the market also does retracement. You understand? Maybe not now. That retracement may not happen now. This thing may still, sell further. But we're going to get the retracement from the market, especially during the US session. You understand? This is about 20-something pips that he did. I believe US 30 also. US 30 also sold. You're not hearing anything. It's your audio, I guess. If you're not hearing anything, it's your audio. Oh, okay. Let's look at the data. Core CPI came out higher. CPI year on year came out higher. And then CPI month on month came out exactly 0.6%. That will still give, because people will now expect that. I think the next time we should be having FOMC data not long from now. Not long from now. See, look at all the move that he made. Hey, who is not hearing any? Are you guys? I believe others can hear me, right? I believe others can hear me. I think it's your audio. It's your audio. The hair, others can hear me. Because even if I try to explain to them that it's their audio, they won't hear me. So I had to drop it in the chat. So if you did not take advantage of anything, hold on, don't be stressed. Just relax. You are still going to take advantage of. But when the 2:30 session begins, the market will still react to this data. You understand? Even if by the time we get to 2:30, market will still react to this data. All this buy that he did to likely want to return back. But with that data, I know that going forward, the dollar is still going to be strong. With this data that came out, when markets don't calm down, don't relax, dollar is still going to gain strength. Dollar is going to gain strength. Okay. So what I'm going to advise, because this CPI data is still going to push dollar on that upward trend. That trend for the trend for dollar is going to be upward going forward. Whatever retracement it does or whatever, the trend for the dollar is going to be upward. That means that Euro USD will likely continue its downtrend. GBP USD will likely continue its downtrend. US 100 will continue its downtrend. US 30 will continue its downtrend. So what are you doing? It means that all those currencies paired against the dollar at resistance point, you want to be scalping sell from there. That's what you want to do. That's what you want to do. At resistance point, you want to be scalping sales from there. You understand? That's what it's about. Because, hey, these people that cannot hear me, what do I do? I guess these people are persons who just came in. Well, there's really nothing I can do if you can't hear me. There's nothing I can do. Okay, there's nothing I can do. So, like I said, during the US session, we are going to also see during the 2:30 session, we're also going to see, a very good move in the market. You understand? We're going to see a very good move in the market. So for those persons, especially those, for instance, those people that did not hear me now, they most likely were not able to take advantage of the move in the market. So just try and sort out your audio issue. We are still going to the 2:30 session is almost an hour. For now, we are going into training. I want to train us on currencies. We just have to make a quick stop on that 1:30 session. Okay, so let's do our training now and prepare for the 2:30 session where I'm still going to give trades for the 2:30 session. Okay, good. So let's move on. We are going into currency trade, and remember that the last time we talked about currencies, we use some candlestick patterns. Please, I want to ask, just for the sake of feedback, is there anybody who through last week to now was able to look at those candlestick patterns and you were able to recognize them on your chart and use them? Because I need feedbacks. You understand? I need feedback. Is there anybody here who, especially with the engulfing, we talked of the engulfing pattern and we talked of the hammer. I think we even traded that day on Euro JPY and something like that. So is there anybody who on their own have been able to go back since after that meeting and checked out the engulfing pattern and how it works? Is there anybody? And you have been able to use it in trading? We did this trading on 1:30 because of the high impact things that came out by 1:30. It's usually we're all working towards the 2:30 session. Okay, so the idea is that our class holds normally we have two trading sessions. In the morning by 8 a.m. we have the MMR with the same link, and then by 2 o'clock we have the live trading session for the US session. Okay, but on Wednesdays and Thursdays, we start earlier than 2. We start by 1 o'clock. Because Wednesday, we devote Wednesday to studying currencies, and on Thursday, we devote Thursday to studying indices. You understand? So that's why it's like that. But I'm asking a question. I have not gotten an answer, and this is there. So we talked of engulfing candle, we talked of hammer and inverted hammer or shooting star. Oh, thank you so much. Somebody has messaged me that I was able to use it. Remember I said that you may have a problem with easily identifying these patterns except you practice. Okay, you may have a problem with identifying this. Thank you, Amarachi. You may have a problem with identifying these patterns except you practice. When you begin to practice, it now gets easier for you to identify them. It gets easier for you to identify them. Okay, so please do not forget, the engulfing candlestick is a candlestick that completely covers the body of the candlestick before it, especially a candlestick of opposite candle. For instance, this is GBP JPY. Let's use 4 hours, so that we can see more candlesticks this way. We talked of the bullish engulfing candle. Bullish engulfing candle, especially when you get it on a support. Please, guys, follow me. Okay, so that we can sort this out before. So when you see a bullish engulfing candlestick, and I'm going to show you an example of a bullish engulfing candlestick. When you see a bullish engulfing candlestick, especially on a support, you are expecting price to actually go upwards. And the engulfing pattern is one of the most popular candlestick patterns on your chart, especially when you are trading currencies. If you are trading currencies, the engulfing pattern is one of the most popular patterns. One of the most popular patterns when it comes to trading in this market. Okay, and we're going to check it out. Now, for instance, there was a support here on GBP JPY that we can see. We have a support here on GBP JPY, and then we have an engulfing pattern. This is an engulfing pattern here, ladies and gentlemen. On this support, we had a bearish candle, and the next candle was bullish. What did this candle do? This candle completely covered that bearish candle. That bullish candle completely covered that bearish candle, and that is a buy signal. When you see that that's a buy signal, so on 4 hours here, with this candlestick pattern, you can already tell that GBP JPY is likely going to change her trend into an upward trend. And what does that mean? If I know that the trend is going to change to an upward trend, I'm going to be taking buys from support zones. I'm going to be taking buy trades from support zone. This is just like a recap. You understand? This is just a recap. So for those that are new, you just continue this session. One day we're likely going to take these topics into, but we have a topic for today that we want to look into. You understand? We have a topic for today where we want to look into, and you know, it's best that we look into that. Okay. Now, okay. So what we're going to be talking about today is trend, especially for currencies. What we want to talk about today is trend, how to easily identify trends. We're going to do this between now and the next, you know, close to 40 minutes or so. We're going to explain trends to ourselves in the next 40 minutes. Then we enter into live trading. Well, not really within the next 30 minutes. Then we are going to start analyzing the market to prepare for the 2:30 session. Okay. But what we want to talk about today is trend, how to identify trend when you're trading currencies. Okay. And I feel like the trend is one of the most important. And yes, the same thing applies for resistance zone when price on a downtrend. So I was saying, I think one of the most important things, especially for the trader, is trend. You know, it's not the final solution. It's not like when you're good with trend, you have arrived. But it's very important because it can help you, you know, guide your decision as to what position you are going to take in the market. Now, let me explain something. Most times, most of the trades that, you know, traders take, except for scalpers, I really love scalpers, I won't lie. You know, I have one or two strategies I use for scalping. I love scalpers because they don't have to stay too long in the market. Okay. But people who are swing traders or just normal intraday traders, you agree with me that our trade most times do not immediately go into profit. And you know, when even saying immediately is a stretch. Sometimes you're on the trade for hours. You understand? You're on the trade for hours, you're on the trade for days. So it's always important that at least your position where you enter the market is in line with the trend of the market. Because if where you enter the market is against the trend, you know, it is more risky. But if where you enter the market is in the trend, that's why sometimes some people enter the market, and even when the trade is going against them, they can even add to their balance because they say this market is on a downtrend and I'm on a sell. No matter what it's doing, it's still likely, there's a very high chance that it's going to return back to my position. You understand? And so sometimes when people say, oh, I'm holding a trade, I've been on a trade, please, what do I do? I always ask them, that your trade, is it in line with the trend of the market? If it is not in the line of the trend of the market, I think that what you should be asking yourself is, where do I come out of this trade? You understand? Instead of the hope where sometimes we hold our trades and then one day it's all gone. What you want to tell yourself is this trade I'm holding, is it in line with the trend of the market? If it is in line with the trend of the market, then you can, you know, hold on that trade. But if it's not in line with the trend of the market, that's when you can be checking it to see at what reduced loss should I come out of this market and thank my stars or thank my God. You understand? So that's what we're talking about today. We're talking about trend. We basically have two main types of trend. We have the uptrend and the downtrend. We have the uptrend and the downtrend. And let me just say this for the sake of, because of the fact that I'm on this chart, I'm on this market, GBP JPY is likely going to return back to an uptrend. GBP JPY is likely going to return back to an uptrend. And so for people who are trading GBP, if you are not even trading GBP JPY, go and find it and put it on your chart. Anytime it retraces towards any support, you want to take a buy from there. Anytime it retraces back to your support, you want to take a buy from there. Okay, good. So let's continue. I just did an analysis on GBP JPY to explain, and I'm going to explain why. So a trend is the general price or general price movement. When you talk about trend, you're talking about the general price movement where the market is, general price movement. So it does not mean that the market is not selling, or it does not mean the market is not buying, but it's saying that generally this is where price is headed. Do you understand? So that's what it's saying. Generally, this is where price is headed. Okay, good. So most times the best way to tell a trend, or the best time frame to analyze a trend on, is the daily time frame. Daily time frame, 4 hours, is the best to see the general movement of price. Because the thing with trend is that trend varies from time frame to time frame. You can see a downtrend on the 15 minutes, and when you check on the daily time frame, it's on an uptrend. Okay, now this is it. A trend is characterized by highs and lows. A trend is characterized by highs and lows. That means one of the best ways you can tell a trend is by watching the highs and the lows. So with the high, we can tell what the trend is. With the lows, we can tell what the trend is. And that is where we get the definition of the uptrend and the downtrend. Okay, that's where we have the uptrend and downtrend. For the downtrend, what you're expecting is, you want to see if a market is on a downtrend, it means that it has lower lows and lower highs. Okay, it means it has what? Lower lows and lower highs. That's a downtrend. I'm going to show you on the chart why an uptrend means higher lows and higher highs. A downtrend means higher lows and higher highs. That's what it means. Okay, so if you're talking about trend, you have to check it. Now, let's look at this chart that we are currently on. I have shrunk the chart to reveal most of the show you a wider range of candlesticks on the daily time frame. You agree with me that from this point here, if you follow my cursor, from this point here, price was giving an uptrend. From here, price was giving an uptrend. Why is that? You will find out that price was giving, now this is what an uptrend is. This place is a low point, and price moved up and price came down here. But this place that price came down, it was not as low as the last time. And so this is a low, but it is a higher low than this one. So this is a higher low. Now from here, price went up, tried to come down, but did not come down like the last time, and it made a higher low, to make it. So what is price doing? Price is making a higher high and a higher low. That is why it is an uptrend. Price is making a higher high and a higher low. So that is what? That is an uptrend. So where you can tell what a trend is from the low. You see that, oh, this place here, higher high, higher low. For me to get a higher high, higher low, it means an uptrend. Especially, now listen, especially when you can guarantee, you can see 2 or 3 consecutive higher highs and higher lows. That establishes a trend to you, and you know what to do in that market. Okay, now from here, I'm going to try and mark the chart. I'm going to mark the chart so please just follow me. I'm going to first of all mark this place here. I'll mark this place here. Okay, I'll mark this place in green, right? I'll mark that point in green. Then I'm also going to use arrows. I'm going to use arrows. This is the first place I'm putting my arrow. My arrow here, I think this is a bit small, so let me make it big. So this is my arrow here. What you would notice about the arrow is I put that arrow around the last low. You understand? I put it around the last low. So we are going to monitor it from there. Okay, we're going to monitor it from here. From this low, it went high, right? It went high, and then he came back. He made, oh sorry, he made another low here. We are going to now compare where that low is. After from this, he went up, he came down here, he made what? He made another low here. But you can see that this my low here is higher than this last low, right? It's higher. And then it went up. It came down to make another low. It came back to make another low here, right? From this place here, from this last low here, it went up. This trend is already established as an uptrend. So within the course of from January to middle of March, GBP JPY on the daily time frame is identified an uptrend. Why? I'm going to take that reason on once again. Because he was able to make 3 consecutive higher lows. He was able to make 3 consecutive higher lows. And because he made that consecutive higher lows from there, we can establish and say this is an uptrend. And what does that mean? Once we establish that, if we are now trading on GBP JPY, if you are trading on 1 hour, doing your normal intraday trading, the best time to end, the best position to enter in GBP JPY from this point here would have been a buy. And that buy, the best place to enter that buy is from a support zone. So when you enter the support zone, what that means is that you are entering at a retracement zone to follow the trend that is going to likely make a higher high. You understand? So that's what the idea is. That's what it's all about. That's what it's all about. The idea is to ensure that you can tell the general direction of the market. Now, I marked this place here in green. And when I marked this place to show that around this place here, there was actually no trend here. Price was just ranging. So market can be on an uptrend or can be on a downtrend, or market can be on a range or what we call a consolidation. Okay, so but if you can tell the trend of the market, let me zoom in again so that you can come and so if you can tell the trend of the market, we can tell what the market is doing and we can tell the best position to take in the market. Okay, now look at this particular, look at the top point here where this market actually got to. This market got to this place, right? It got to this place. It made from here, from this point here, market made a low. He made a low. From here, it retraced back up. Okay, he made a low from here. This is the first high. This is another high, right? But you let me mark it. Let me mark it so that we can see it. So this is the first high. This is the first high he made, and then he came down, right? Okay, let's mark another one. Then this is the next high here. Because it came down here, went up here and came down. Now, if you compare this high, with this other high, you can see that the second high is lower, and that is a lower high. That is a lower high, right? If you compare the low, this place where it was lower, this place was low, but this particular place was not lower. This is not a lower low. So this trend is not confirmed yet. In fact, as far as I'm concerned, this is the first high, this is low. Okay. This is another high. This is the next, this is the lower low here. This point here is the lower low, not this one here. This is the second lower low. So if this thing can give us a third lower low, then it can guarantee that it's on a downtrend. But the reason why I said for GBP JPY to look out for a buy is because GBP JPY is currently giving us what we call 3 white horses, or 3 white soldiers. Okay, 3 white soldiers. Now that is when price is at a support and it gives you 3 consecutive bullish candles. If today's candle closes on GBP JPY and it closes as a bullish candle, that means that price is likely about to return back to the upside. So the best thing you're going to be doing if candle closes bullish on GBP JPY today is to be looking out for a buy on GBP JPY. You understand? Someone is saying that those move, the dollar actually reacted quickly with strength. What market is doing likely now is returning back to the downside. So that's why I said, let's hold on. If you did not take advantage of that buy for the dollar, let's hold on for the 230 session. We're going to follow what the 230 session is going to do. It's why I said that you do not expect that a fundamental, you cannot tell for how long a fundamental move is going to be. That is why you're entering as quick as possible and coming out. Okay, but we're going to see what the US session is going to do, and we're going to do that. Please focus on the currency analysis that we are doing now. Okay, by 230 now, we're going to look into what the dollar is going to do for 230 session. Okay, now, because if you check all of those dollar pairs, they initially first came down against the dollar before returning. You understand? So that quick move to relate to the data on CPI is what is important. If you cannot take advantage of that quick move, then we'll wait for the US session and then we'll be able to take advantage of that. Okay, so I was explaining something about GBP JPY, or I was explaining something about trend. And I was saying that one of the best way to be able to tell a trend is that you should be able to easily mark the higher high and the higher low for an uptrend. There's an image here that I would like to show us. I think that image easily explains okay, uptrend. Let me share my browser with us. Uptrend and downtrend. So let's go to images. Oh, very good. Okay, so if you look at this, okay, now if you look at the image by my right side here, you can see trend, uptrend, downtrend, you know, uptrend, downtrend, uptrend, downtrend, uptrend, downtrend. You understand? Oh my God, people are not listening to me. Okay, you understand. So the Daniel Akpan, you are confusing time frame with market volatility, and it's very different. Now, if you go and trade on 1 hour, does that mean that you're going to leave your trade for an hour? That's not what it means. If you're trading on 1 hour, it does not mean that you leave your trade on 1 hour. Okay, let's go to the chart. Okay, let's go to dollar index. Dollar index, most likely, yes, is selling right now. The candle is bearish. This is 1 hour time frame. This data, for instance, the data was released by 1:30, right? So let's check. We're now going to check within 5 minutes to see what the data did. Okay, we'll see what the data did within the time that it came out. Okay, so we check dollar index on 5 minutes, you know, because that will be able to give us better distance. Because, you know, some people are coming in, you know, 10 minutes later or 15 minutes later and are saying you expect that it should continue buying. And I took time to explain before this data that fundamentals is not a matter of how long. It's not a matter of how long. This is the best loss. I come in and come out as soon as possible. Somebody was asking me, how long should I expect the trade to last? I specifically said, it's not about how long. Now, this is, let me zoom in. Okay, good. This is when this data came out. This is it here. If you check now, because this is GMT, my time here is showing 2:30, but it's actually 1:30. Okay, this particular time is when that data came out. Okay, and when that data came out on the dollar index, you can see how this is dollar index chart itself. Dollar index chart itself moved 30 pips. This is a reaction to that market move. Okay, it's a reaction to that market move. And even technically on 5 minutes, you can see that the dollar index is still gradually pushing back upwards as we approach the US session. So you cannot say that that's the thing is that you expected that impact to last for a long time. Okay, and that means that you did not actually listen to what I had to say. This is GBP USD. By the time that data came out, 5 minutes, 2:30. This data came out here. You can see, oh, let me zoom in, sorry. Good. This is the data that came out. From where price was, let's say price started around here. Price was able to sell about 37 pips. You understand? Before pushing backwards. And even technically, you can see an inverted hammer. You can see that GBP USD is likely still pushing towards the downside. Do you understand? So you do not determine how long a fundamental is going to last. The best thing is you are entering with the best lot size. Enter. Once you make profit, you come out. You understand? But for you to enter and say, this thing did not go for long, or did not go for long, nobody really has a control about regarding that. And I also told us that one thing about CPI, or one thing about most fundamentals, is that once there's a move like there's usually a retracement to the backside. But just hold on, let the 2:30 session resume, and that is when you will now see what investors on the US session will react to the data that came out by 1:30. Let's even look at some of these other fundamentals. Some of the other currency data. Okay, currency or currencies. I think we have checked GBP JPY, because what I want to do now is we're already approaching 2:30. So as I'm explaining this trend thing, I'll be analyzing all the instruments we are going to be placing trades on during the 2:30 session. Okay, so this is dollar index. Here we go. Good. Okay, so this is dollar index. So what I'm doing now is I'm going to be looking at the trend. I'm going to be analyzing the market, as we continue. This is dollar index, and this is dollar index on the daily time frame, and we can see that it is. You agree with me that the dollar index is on an uptrend. It's on an uptrend. Why is that? Because you find out that what did I say makes up an uptrend? Highs and lows. From the last time price got here, price has been making, look at, if this is the first low, let me zoom in. Okay, good. So if this is the first low down, for those who cannot see my cursor is at the bottom of the screen, at the middle, the bottom middle or middle bottom of the screen. So from here, price made this low, price was able to push up, and from this point, price made another low. But this low that price made here is not as low as the last one. It's still higher than the last one. And that is why this place here, we call this a higher low. A higher low. It made another push up, it made another low, a higher low. And so what price is doing is price is making what? Higher lows. And price is also making higher highs. You understand? This is daily time frame. We're looking at the trend on this daily time frame. Price is making this higher low and higher highs to tell us that price is on an uptrend. And that is why if you'll find out that for a couple of days, price has made another low. But this low that price has made it against a support. And we expect that from here, price is expected to continue the trend to make a higher high. Okay, price has made a low from this point. It made a low here. It has gotten to this point. Okay, and it's showing signs like it's pushing back up to the upside to continue this trend back to the upside. You understand? So that is why if you check it, this is what makes a trend. And that is why I still expect, okay, that technically this is an uptrend, except we get series of at least maybe 2 or 3 consecutive lower lows, then the price has now guaranteed that the dollar index is on a downtrend. Okay, so the dollar index is still on an uptrend. Okay, and so if you are trading the dollar index as an instrument, normally the best thing you want to do is you want to buy at support zones. If you are trading the dollar index as an instrument, the best thing you want to do is to buy when dollar gets to a support zone. Okay, now I'm going to use this dollar index. Now we're going to do an analysis on GBP USD. Okay, let's do an analysis on GBP USD. Now, this is GBP USD, and for GBP USD we have it on, let's look at it on the daily time frame. This is GBP USD on the daily time frame. You can tell that GBP USD is on a downtrend. You can tell that GBP USD is on a downtrend. Why? Because from this particular zone here, from this up point here, okay, GBP USD has been making series of lower lows and lower highs. So GBP USD is on a downtrend. Now, when you see that this instrument is on a downtrend on the daily time frame, what is the best thing to do? I've repeated this so many times, and I keep repeating it so that I hope that it gets in, it sinks in. If you can tell that this instrument is on a downtrend, what is the best thing to do? The best thing to do is to enter sell positions on resistance. So let's go to 1 hour. Now, this is the current resistance that GBP USD is. If I want to trade GBP USD, trading GBP USD, in fact, entering the current US session that we are looking at to trade GBP USD, where you can see that GBP USD is around the resistance, somewhere like this is where I'm going to look out for a sell on GBP USD. 1. Somewhere like this is also where I'm going to look out for a sell on GBP USD. 2. Somewhere like this is where I'm going to look out for a sell. Somewhere like this is where I'm going to look out for a sell on GBP USD. You can see that I am picking resistance points to take my sell. That's what I'm doing. So when the 230 market opens, if it trades towards this weak resistance on 1 hour here, if it trades towards this 1.25 thousand, 1.25 thousand, from that place, I can take a sell on GBP USD. I can set my sell limit at that zone. Okay, it is less risky when you take a trade that follows the trend, but when you take it at a good entry point. The best entry point you can enter the market is around support or resistance zones. If you can tell that this thing is a downtrend, enter the sell at a resistance. If you can tell that this thing is an uptrend, enter the buy on a support. Okay, so I'm still using my MT4. You understand? I'm using my MT4. You may be confused. Some of us maybe do not have especially those of us that are using our phones, do not have the indicator that tells, support and resistance and all that. Fine, if you don't have that, this is still what you can do. Even with your naked chart, you can tell where support and resistance is. This is GBP USD, right? I've removed the support and resistance indicator, and I want to take my trade. Remember that I have seen that GBP USD is on a downtrend. So what does that mean? I'm immediately looking for the closest on 1 hour. I'm looking around the closest support resistance zone. Because it's on a downtrend, I'm looking out for the closest resistance zones. Okay, so from these resistance zones, I can take a sell from there. Now, where can I tell as a resistance zone? This is number 1 here. Look at this place. This place is a resistance zone here, because you can tell that, I told you, even when you're using your phone, when you see a particular point where candles have made 3-4 weeks around there and price has not been able to break above there, that's a resistance zone. If you're using your phone, you see a place where price has made 3-4 weeks shadows and it has not traded below there, that's a support zone. So somewhere like this, if I put a line here, somewhere like this is a resistance zone. If price buys towards this place, I will sell from here. I'm going to sell from there. If price buys towards this place, I'll sell from there. If price on GBP USD 1 hour, if it buys towards this place, I'm going to sell from there. Why? Because I can see that this place is a resistance zone. If price buys towards this place, I can also sell from there because I can tell that is the resistance zone. It is safer for me to have a sell around here or have a sell around here and expect price to return to the trend than for me to just go and enter a sell anywhere. So we are taking our sell trades in accordance with the what? The downtrend that we have noticed that GBP USD is on the daily time frame. That is trades that it is better for you to hold than somebody who is on a buy trade, for instance. Someone who's on a buy trade on an instrument that is on a downtrend. It's more risky. It's more risky to hold such a trade. That's for GBP USD. So for GBP USD, I'm going to be looking out for a sell when the US session opens. I'm going to be looking out for a sell. If it buys towards 1.25 thousand, I'm going to be taking my sell from there. And also, if at all, let's say it doesn't buy from that place and it starts to sell, if GBP USD sells below, um 1.24555, I'm going to also sell from there and look out for 10 pips or 15 pips. Do you understand? That is why most times, like I said the last time we took in the currencies, it's better to wait and be patient and enter that market at a good point. See, the truth is that in this market, whether you buy or sell, you can make profit. Where you buy or where you sell is even more important. Okay, so for GBP USD, what am I expecting? Okay, yes, to get the time, now you can get trend on different time frame, but what is what I'm saying, you get the when it's trend, because for trend we are talking about the general movement of price over time. So it's better that you analyze the trend on the daily time frame, because the daily time frame is a longer time frame that eliminates couple of noise. So it's better you get your trend on the daily time frame or on 4 hours time frame, and then you can take your entry. You can decide where to enter the market on 1 hour or on 30 minutes for intraday trading. So you can get your trend on the daily time frame of 4 hours, and then you can choose your resistance or your support point to enter the market on 1 hour or 30 minutes. Pastor no do pass this one, what they do. Pastor no do. Sometimes when I talk like this, I begin to feel the spirit. Okay, so that's for GBP USD. I spent a lot of time explaining GBP USD because I really want you to get it, but let's move on. There are other instruments we need to check out before the 2:30 session. Okay, well, what is the likely confirmation that price at a support zone? I've explained that a support zone is a zone where price has not been able to break below. You can tell that. Look at this place. You will agree with me that this is a support zone. See, price was not able to see this place like this is a support zone. Is a support zone. Can you see that last time price was here, could not break below? Price was here, could not break below. So this is a support zone. It's a support zone. It's a support zone. You understand? It's a support zone. A resistance zone is above. Resistance is like the ceiling of your house. So a resistance resists price from going further upward. Why a support? Support price from falling lower. I support you from falling. I resist you from going further. That is why we say we resist the devil and we support our neighbors. No, because you support your neighbor, you are standing below your neighbor to make sure he goes ahead, goes higher. But you are resisting the devil, you are standing above the devil to make sure the devil goes down. What will I not use to explain support and resistance like this? So you exactly, Kehinde, you've gotten it. So Kehinde, you've gotten it. So you buy at, so it's better to buy at a support and to sell at a resistance. whether trend or not, it's better to buy at a support, because let me explain something to us. I explained the last time I was here. Okay. I explained the last time I was here. I was saying that if what support and resistance is relates to demand and supply. Let me explain something to you. If I am selling a bag and I say this bag is 5,000, I continue to sell it. I say it's 5,000, it's 7,000, it's 10,000, it's 15,000. Price will get to a point where people will say it's too expensive, we are not buying again. Let's say at that 15,000, they say it's too expensive, we are not buying again. So now nobody is buying from me. Because nobody is buying from me, I will be forced to reduce the price of that bag. That's what a resistance is. That is why it's better to sell at a resistance. Because at a resistance, bulls are they are no longer interested in buying further because it's becoming too expensive, and so price will automatically fall. And at a support, if price continue to fall, people say my bag is too expensive. I continue to I say, oh, okay, I reduce this from 7,000, I reduce it to 5,000, I reduce it to 3,000, I reduce it to 1,000, and I say, no, I cannot sell it any lower than this. I'm not producing again. I'm not selling again. What will happen? It means that bags will be scarce. And once bag is scarce, automatically the price of that bag will begin to rise. That's why it's better to buy at a support. Yeah, okay, you've gotten it. Thank you. So let's move on. Okay, so we've looked at, let's check out US 100. Let's check out US 100. So for US 100, I already explained to us. I told us the last time that you are trading US 100. I got some mails from some persons who have done well, but I said that if you are trading US 100, please, at resistance points, take a sell, because US 100 is still giving us, that downtrend vibe. Now, why did I say that? When we were analyzing US 100 some weeks back, we saw this range here in the market for a couple of days. We saw this range. What did that mean? That meant that we now said that if price breaks below this place, price will go down. If price breaks above, price will go up. Now, price break below and price went down. Okay. Now, price made a little retracement that was not as high as the last time. And yesterday we had like an engulfing, not the perfect engulfing, but we had such a bearish candle to still show that there is bearish pressure on US 100. There is bearish pressure on US 100. Okay, there's bearish pressure on US 100. And another thing we talked about is that, remember that I gave us a 50 EMA pattern, 50 exponential moving average pattern, that I said put it on your chart, especially on 15 minutes for scalpers. If you have two consecutive, I said if you have two consecutive bearish candles below the EMA, sell. I remember I said that. And I said if you have two consecutive bullish candles above the EMA, buy. Even on 1 hour, you can do it. If you look at US 100 on 1 hour, we had two consecutive. Look at, we had one bearish candle here, but the next one was not bearish, so we don't sell yet. Now we had this one bearish and we had this one, two consecutive, so we sell from here and we're able to make profit. So the fact that we still have these two consecutive bearish candle below the 50 period EMA still means that US 100 still has that bearish pressure. Okay, US 100 has that bearish pressure. So for US 100, I'm still expecting a sell in the market. Of course, it has hit here and it has given us something like a hammer, that shows that there's likely to be a retracement, but I still expect a sell for US 100. I expect a sell for US 100. Especially, this is 15 minutes, guys. Look at 15 minutes on US 100. 15 minutes on US 100. We've had two consecutive bearish candles. Okay, we have this bearish candle right now. If this current candle closes as a bearish candle, please sell US 100. Put your 50 period exponential moving average on your chart. The last 15 minutes candle on US 100 closed bearish. If the next one, this current candle, if you also closes bearish, look out for a sell on US 100. If you're selling US 100, if you have a 0.05, you can target 10,000 naira profit on it. Remember that for you to have a 0.05, you need good capital. If you have a 0.01, you can target 2,000 naira profit on it. But if this current candle closes bearish, then you're looking out for a further sell on US 100. But this is where I'm going to advise that if you want to buy, you buy US 100. You can only buy US 100. I'll advise you buy US 100 if it breaks above, not trades to, not pending order. If it breaks above 15,345. If US 100 breaks above 15,345, if US 100 breaks above 15,345, then you can look out for a buy on US 100. You can scalp a buy or look out for a buy till around 15,380. Okay, 15,380. Somebody is asking, how do we put MA50 on our chart? Go to indicators list. Look at it at the top right here. I've really spent a lot of time today. Go to this indicators list, select indicators list. When you select indicators list, go to trend, go to moving average. When you select it, this chart box will come up. Put 50 as your period, put exponential as your MA method, and apply to close. Select OK. Select OK. So I have said once again for US 100, you can only buy if it breaks above 15,345 to around 15,380. But if we have two consecutive bearish candles below the 50 period, look out for a sell on US 100. Okay. That's US 100. Let me quickly look at other instruments before this thing. We've looked at US 100. Let's look at US 30. Let's look at US 30. Okay, so this is US 30. US 30 has given us a low here. This I'm looking at it on the daily time frame. Gave us this high, and gave us this point. Now, what's the point? The point is right now, if you look at US 30, US 30, after this low, the next low that it gave is higher. This is a higher low. This low is higher than this last low. So this is not giving us as much of a downward trend as it's giving us as much of an uptrend. You understand? So yes, 30 may actually be giving us more of an uptrend in this market, but let's look at it on 1 hour. Good. Now this is it. This is where it is on 1 hour. On 1 hour, it has hit this verified support. Due to that 130 news, it brought it down to this verified support, after which it has retraced. This place is a place that has really rejected price for a while. Okay, this place is a place that has rejected price for a while. So what do we do? What do we do? I can also apply my 50 moving average to the chart. Moving average 50, apply. Good. Now, the question is, at this point now like this, there are two ways I can do this. With the 50 EMA, I can wait to get two consecutive bullish candles above my US 30 chart. You see that what price has been doing for a while, price has just been ranging, right? Price has been ranging. Now, if I get two consecutive bullish candles above, I can buy. If I get two consecutive bearish candles below, I can sell. Because what US 30 is doing right now, US 30 is just ranging. US 30 is just ranging. Okay, but we have a verified support here, so I would expect that US 30 actually pushes up. That's what I would expect. I will expect US 30 pushes up. So what am I going to give us? I'm going to give us a buy at around 34,720. I'm going to advise a buy at around 34,720. Take a buy from that place and just come out at around let's see this place here. Good. So I can take a buy on US 30 at around 34,720, take profit at around 34,760. For my US 30, I can take my buy at around 34,720, take profit at around 34,760. That's for my US 30. For my sell, I'll be looking forward to that sell once I have two consecutive bearish candles below my 50 period moving average, exponential moving average. Yes, it's more, all these things are on YouTube. This class is on our YouTube channel. It's going on, so you can still go through it. This class is live stream. So once you go to YouTube, you will find this class there. You understand? So that is US 30. We've done GPUSD, we've done US 30, we've done US 100. Let's look at gold. Okay, so this is gold. Gold also on a downtrend, giving us lower lows. Look at this low, retrace, give us another lower low. That's retraced and it's falling from this point. It's likely that it's going to give us a lower low again, especially if our projection for dollar continues. That means if we still have a further push up in the dollar, gold is likely going to sell more. So this is where I'm looking at for gold. For gold, my closest resistance is at 1913. 1913. 1913 is where my closest resistance is for gold. Okay. And so if at all I'm looking out for any buy at all, I'm looking out for any buy, I expect price to break above, not even 19, I expect price to break above 1914 before I can take advantage of buy. But what I'm going to advise for trading gold is if price buys towards 1914, if price buys towards 1914, you can actually look out for a sell from there. You can look out for that sell from 1914 and take profit at around 1912. So you can look out for a sell from 1914, or you can even place a sell limit 1914. You understand? That's what I advise. If price breaks 1914, if it breaks it, that, and what do we mean by break? We mean that the body of the candle has to form above it. If you form not pending order, or if you break above it, if the body of the candle closes above that particular point, then you can expect that it should likely buy to around 1917. Okay, expect that I should buy around 1917. But I would expect that from this particular resistance point here, gold is likely going to return back to the downside. Okay, because of that down. Yes, you can apply that 50 EMA on all time frames. You just need to be patient for that time frame. You understand? And there's no difference between XAUSD and gold. Gold is what we have. Gold and other brokers have it as XAUSD. We also have it as XAUSD on our Pro platform. You understand? So yeah. So that's what our advice. Our advice that we are even selling at 1914, 1914, and taking a profit at around 1912. Okay. But if price breaks above 1914, that's body of candle closes above 1914, then I would expect that I can buy to 1917. Okay. Let's look at US 2000. Okay, so this is US 2000. Also, at it's done a little kind of support on the daily time frame. Made a kind of support on the daily time frame, and it's likely a good place for it to push the upside. When you see something like that on the daily time frame. But we check it on 1 hour, US 100 is still going to range. It's ranging between a proven resistance and a verified support, and it's such a tight point. A proven resistance, a verified support, and um for a while now, since the beginning of this week, US 2000 has been ranging from this place to go up to this place, to come back down, to go to this, to come back down. Do you understand? In fact, from last week, you understand? So US 2000 is currently painting a very stubborn picture where we actually need a breakout. A breakout is what is needed before we can determine the long-term move on US 2000. You notice that the zone is here. So for people who want to trade US 2000, personally, if you don't have a trade on US, I'll advise that you just hold on US 2000. Let's hold on US 2000. It's not really it's giving a range, and so it's very possible that you're caught in one place or the other. Okay, let's hold on US 2000. I'm going to drop the YouTube link. Okay, let's look at USD JPY. USD JPY. USD JPY may likely continue that buy that it actually made. I remember that we said the dollar is, on okay, it's 230 already. We'll likely continue that buy that it had already made. You understand? So for US US JPY, you have a verified support here. So I would advise that we are going to be looking out for taking a buy from this zone here. We'll be looking out for a buy limit or taking a buy from this zone here, from this verified support zone here. That's what I would advise, to take a buy from here. So that is around, for USD JPY, that is around 147.20. Around 147.20 is where I would advise that, you can look out for a buy from there. That's a verified support, and likely just be a place to continue the trend on this thing. So US 100, look at US 100. US 100 is currently looking bullish. Remember that we have given 15,345 for US 100. That's a place it must break. Okay, a place it must break before we can actually continue that buy. Then GBP USD is around that 1.25 thousand, its own resistance point. Remember that is a place where you can actually look out for a retracement in the market, around 1.25 thousand and also around 1.25320. Those are the resistance points that I feel like the dollar might likely reject price back to the downside. You understand? Good. For gold, we said that we're looking at taking a sell around 1914 and coming out of at around 1912. I think it's it's already in play. It's already in play. D30 is actually bullish. US 100 is currently above 340, but remember I said it has to break above it, right? Please, it has to break above it. So except you're scalping a buy now, except you're scalping a buy. For those people who want to do intraday trading, let it break above that place. Let it close. This is a 15-minute candle. So within the next 3 minutes or so, likely close. You understand? Within the next 3 minutes, this particular candle should close. That's when we're going to determine. Okay, this candle even started 2:30. So by 2:45, that candle will close and we'll be able to determine what it has done. You understand? Hey, so you want to wait for that candle, let that candle close. For those people who are on GBP USD, you're looking out for around 10 people thereabouts from that resistance point. Okay, from that resistance point, you can actually look out for a sell from that resistance point. We also have another resistance point here at 1.25329 that I still expect price to fall back down from there. You understand? So let's look at USD JPY. What did we give for USD JPY? We are looking out for USD JPY is currently selling, but we are looking out for a buy once it sells to that 147.200 zone. If it falls to that 147.200 zone, we expect that it's likely going to push up from there. You understand? So we are entering a buy on a support zone. You understand? Okay, what informed your opinion about the price you gave for US 100? Okay, so we analyzed US 100. We found out that generally US 100 is on a downtrend. You understand? You see, so it's on a downtrend, and so we do not want a situation whereby we're caught up in a pending order and price is rejected. Okay, this is a zone that price has been rejected quite a while. So that is why, even if you check on 1 hour, that is the 50 period. That is where a 50 period is. So there's a high chance that price is likely going to be rejected to the downside. That's why I did not give a pending on. I said instead, let it close above here, because this place looks like a resistance point. Price was recently rejected around here. This place also looks like, that's why I push price above there, because it's like a resistance point. Okay, hence a resistance point. That is also why I gave a sell around this zone here. I gave a sell around here because it's a resistance point. I said take a sell from 1.25 thousand and look out for around 10 pips or thereabout. You understand? For gold, what did we say? We said around 1914. You should be in play now. Take profit around 1912. You understand? That's what we said, right? So if somebody had even entered the sell around here, you'll be in little profit now. But I think we should be considering around 1912. Okay, around 1912. It is US 30 that we gave pending order for 34,720, come out at 34,760, and I think that actually gave profit. Okay, that hits take profit. I'm sure that most persons will likely not take that. Okay, so let's still look at some instruments, because we did not look at many before 230 session began. But the good news is we can actually still take advantage of them. So let's look at Euro USD, for example. Euro USD has also been doing its own downtrend and then has given us a couple of, days of retracement. Okay, days of retracement doesn't still mean that it is not out of the water. Okay, so Euro USD is also approaching its own verified resistance on 1 hour. Euro USD is approaching its verified resistance on 1 hour, and so that is a good place to take a sell from. Okay, that's a good place to take a sell from. For those who are trading Euro USD, you want to take your sell. It's currently buying, but there's a verified resistance, some pips above. So around 1.07650, around 1.07650. That's a verified resistance. That is where you want to look out for a sell on Euro USD. Okay, that would be my advice. That's what you want to look out for, because that's a verified resistance on Euro USD. You understand? It's currently buying, but it's approaching a verified resistance where, except it breaks that point. And remember, when I say break, I mean that the body of the candle has to form above that point. So except the body of the candle can form above that point, then that's when you can even say that, it has broken that particular point. Okay, good. GBP USD is currently trading above that our entry point. Okay, but remember that we have still another verified resistance at 1.25329. Okay, another verified resistance around that point where we likely expect it to come down. I've not looked at oil. Okay, for oil, what do we have here? Oil is doing its own, guys. Oil is bullish because of a lot of supply cuts that we are having in the market. Okay, we are having a lot of supply cuts, especially from OPEC, and because oil is an instrument that, if there's an instrument that is very, very, very much impacted by supply and demand, it's an instrument that is very much impacted by supply and demand, is oil. Once supply is reduced on oil, the price increases. Okay, and so that's why oil has been making an uptrend. I don't know. I don't think this is, well, this is not any record. Oil has gotten as high as 130 before, but it's on an uptrend. Okay, so if we check it on a smaller time frame, let's see what it's doing. We'll see that it is retracing towards a support zone. Is retracing towards a support zone, and that will be good for us to take advantage of. Okay, this is a verified support on oil, where oil is on 15 minutes. This is a verified support. Okay, so it's a good place for me to actually take advantage of trading oil. If oil sells towards this verified support, that means if oil sells towards 91.99, if oil sells towards 91.99, you can take a buy from there. You can take a buy from there if oil sells towards 91.99. Okay, but you can also set a buy stop. You can set a buy stop at around 92.42. You can set a buy stop at around 92.40 zone, and then set your take profit at around 92.60 zone. Okay, so you can wait for it to get towards 91.99, 91.98, so take your buy. Okay, or you can set a buy stop at 92.40, take profit at 92.60 for oil. You understand? Okay, someone did not get what I said about Euro USD and USD JPY. I'm going to take that again. Euro USD, I said it's approaching a verified resistance. This is Euro USD now. It's approaching a verified resistance, and I said you want to look out for that 1.0, this verified resistance point on 1 hour. Okay, which we have it at 1.07670, around there. That's where you want to take advantage of a sell on Euro USD. Okay, and for USD JPY, I gave us a support zone which price has gotten to. I said around this 147.20. You say you want to look out for a buy on USD JPY. That's what I said, right? I even marked the zone, and prices around that zone. That's where you want to look out for a buy and target some 10 pips or thereabout in the market. You understand? Okay. Okay, so CPI came out positive for the USD, but I'll give you that. But we see USD still falling. What could be the possible reason for this price movement? Now, so this is US dollar. This is the dollar index on 1 hour. That bullish move that we expected for the dollar. Okay, the thing with that bullish move is that there is no time frame for how long. There is no length of time for how long we expect that bullish. Maybe you were not here. We checked on 5 minutes and we saw that when that data came out for the dollar index, it gave about 30 pips bullish move. Okay, but as it is with fundamentals, when a fundamental comes out, okay, it's hard to tell for how long the impact of that fundamental will remain in the market. What it just tells you is that I can tell you that this CPI data will likely have a larger effect on the market. Once price reacts to the market first, there's a high chance that price will return back. And price will now start working, in relating to that data as time goes on. It will now imbibe it as technical analysis. So yes, when that data came out, we expected the dollar to buy, and within 5 minutes, the only thing is just that this move did not happen for, as you sometimes there have been times when CPI came out and that particular move continued till 3 o'clock or till 4 o'clock. In this case, that move happened for around 5 to 10 minutes and then retraced. Okay. But the truth is that as investors digest this data, the long-term analysis that you will now begin to see, there's a very high chance that the dollar will now begin to gain strength as time goes on from today into tomorrow and thereabout. But what I want you to pick from what I just explained is that the dollar reacted as we expected to this news. It's just that it did not continue for as long as many of us wanted. And that's where fundamental is hard to control how long that move happens. That's why I said that as soon as possible that you get that data, the best thing you want to enter as soon as possible, highest lot size possible. You don't want to stay too long in the market. You want to capture as much as you can capture within the shortest time possible. You understand? But I'm still telling you that with what I know, even if dollar index falls to this verified support here, is even going to still push up. So that's why I said that since we understand that this data is good for the dollar, okay, there's a high chance that if you're trading dollar index, you want to buy at a support. There's a high chance that if you're trading Euro USD, you want to sell at a resistance. There's a high chance that if you're trading GBP USD, you want to sell at a resistance. There's a high chance that if you're trading US 100, you want to sell at a resistance. Just like that. You understand? Okay, for those persons who have issues with that audio, I think the best thing would be for you to join that. I'm going to drop the YouTube link because we're actually done with today's session, but I'm going to drop that YouTube link. For those people who took the sell on 1914 to 1912, you should be in profit now. So please watch it, okay? On gold. The sell on 1914 to this thing. For GBP USD, you'll still be on the trade, maybe very tiny profit, but remember you are looking out for around 10 pips or thereabout. US 100 has not been able to break around that place. Remember that it must break above that place before we look out for a further buy. So I think if this candle closes bullish, okay, on 15 minutes, you can still scalp a buy on US 100, okay? For oil is already at that verified support. Oil is already at that verified support. So it's very possible that from this zone here, we start seeing oil push back up, at least give us some profit. But I gave a pending order on oil. I gave a buy stop at 92.40 and take profit at 92.60. Okay. And then I said on this support, you can actually scalp a buy on this support that oil is at right now. Okay. Euro USD, we said that it's going to get to this resistance and sell, if it doesn't get there, it's possible because sometimes you may be waiting for price to get there to take your sell, and it's likely that it doesn't get there. So for Euro USD, you can also still look out for a sell stop around, so if this price starts coming back down, you can look out for a sell stop at around 1.07255. 1.07255. You can look out for a sell there and then target 10, 15 pips. Okay. USD JPY told us if it gets to this place, you should buy from there. Okay. US30 hit our buy stop. Remember, no matter what you're doing, please remember to apply the 50 period EMA to your chart. Apply the 50 period EMA to your chart and look it up on 15 minutes. Once, for instance, on US 100, if you get 2 consecutive bearish candles below the 50 EMA, begin to scalp a sell. Okay. So that's likely what is going to happen even for this US30 that has retraced like this. Okay. Oh, thank you so much. Yes, so we already have, you can see we have the YouTube link, okay, to join us on YouTube. There's no problem at all. I'm going to, there are some persons who I did not reply to their mails. Please, I'm going to take my time to actually do all that, but I'm dropping my email address in case you need to reach me at any point in time via email. Okay, I'm dropping my email address. Don't forget, this YouTube link is very important because this class is there. You can go and watch it from 1 o'clock that we started to now. Everything we did is there. Even the morning session we did today is there. Okay, so please, by tomorrow we are going to have the indices market class by 1 p.m. Okay, so this link will take you to the morning session by 8 o'clock. Make sure you're there, and then this same link by 1 p.m. Okay, this is how you'll be hearing my voice every Wednesday and Thursday until you understand this market and you say, because I understand this market, I'm tired of this young man's voice. Until that happens, you continue to hear my voice. Okay. I believe that that's all. Please do not forget to use the 50 EMA. Use the 50 EMA. Put it on your chart. It will help you to make decisions. Okay. For those persons who are on that gold trade, you can watch it. I'm sure it's in profit already. US 100 currently trading. Let's see, GBP US is still around that entry zone. We are looking out for 10 pips there about. If oil, in case, closes below this point, then someone is asking how to do the 50 EMA. I'm going to take it one last time. Go to indicators list, go to trend, then go to moving average and put 50 as your period here, 50 period. Put your EMA method as exponential, apply to close, and you're good to go. Okay, you're good to go. That's it. Okay, so yes, I want to thank you all for your time. I've dropped my email address, so if you have questions regarding this class and all that, you can reach me or via email, and I will do my best to attend to you as soon as I can. Okay, so we will meet here by 1 p.m. again tomorrow. Okay, God bless you all. Thank you so much. God bless you all. Which one is powerful between EMA 21 and EMA 50? Well, depend on the time frame. I will prefer 50. I prefer 50. You know, the longer the period, you know, the more powerful you expect it to be. But it all depends on the strategy you're working with. Okay, so thank you all, everyone. Bye for now. God bless you all.